Hello and good day to Dr. and my friend. Today we will discuss further about our ACW 274 Financial Accounting and Reporting 2 Group assignment. In this report, we have chosen 3 well-known companies from Malaysia consumer goods sector to analyze their financial report. These 3 companies are audited by different audit firms. Firstly, Nestle Malaysia Berhad audited by EY. Next, Fraser and Neef Holding Berhad audited by PwC. Lastly, Dutch Ready Milk Industry Berhad audited by KPMG. Furthermore, we chose Dutch Ready Milk Industry Berhad to analyze its sustainability report. Besides that, our group consists of 8 members, which is me, Devin Chen, Ming Hui, Yu Xuan, Vidani, Atila, Baiduri, Singh and Chia Yi.
Let's start with Part A, Question 2. How do earnings trends compare in terms of both the direction and stability of income over the last 5 years? Overall, Nestle Malaysia Berhad is the most stable performer, with a consistent upward direction and minimal fluctuations. Fraser and Neef Holdings Berhad demonstrated a stable start, a gradual decline, then finally a strong recovery in 2023, showing an ability to bounce back but with less consistent ability. Dutch Lady Milk Industries Berhad faced the greatest volatility in earnings, with substantial fluctuations over the period, indicating challenges in maintaining a stable and predictable income stream.
On the annual report, return on asset ROA for Nestle Malaysia Berhad in year 2023 is 18.49%, while ROA for Fraser and Neef Holding Berhad is 10.6%. Additionally, the return of asset for Dutch Ready Milk Industry Berhad is 7.65%. Conclusion, Nestle Malaysia Berhad have greatest earning relative to its available resources between these 3 companies. This means that every 1 ringgit of asset, Nestle Malaysia Berhad generate 18.49 cents in profit. This indicates that Nestle Malaysia Berhad is significantly more effective at utilizing its assets to generate profit compared to Fraser and Neef Holding Berhad and Dutch Ready Milk Industry Berhad. Next, I will continue with question 4. Based on the annual report for year 2023, Nestle Malaysia Berhad, Fraser and Neef Holding Berhad, and Dutch Ready Milk Industry Berhad had report asset impairment in their financial statement. Furthermore, Nestle Malaysia Berhad only have 1 impairment asset, which is plant and machinery, while Fraser and Neef Holding Berhad have 2 respective assets of asset impairment, which is building and plant and machinery. Furthermore, Dutch Ready Milk Industry Berhad have 3 respective assets of asset impairment, which are building, plant and machinery, 2 furniture and equipment, and the last one is information system. In summary, these 3 companies have reported asset impairment, and most of the asset impairment are under property, plant and equipment. Furthermore, I will continue with question 5. Based on the annual report for year 2023, Nestle Malaysia Berhad, Fraser and Neef Holding Berhad, and Dutch Ready Milk Industry Berhad had report finance costs. Nestle Malaysia Berhad has 3 components of finance costs, which are finance cost of loan from related company, finance cost of risk liability, and other finance costs. Furthermore, Fraser and Neef Holding Berhad also had report 3 components of finance costs, which are interest expense of financial liability, interest expense on risk liability, and other finance costs. In contrast, Dutch Ready Milk Industry Berhad report 2 components of finance costs only, which are interest expense and finance charge arising from risk liability.
Now let's take a look at question 8, which is review the key audit matters raised in the auditor's report, discuss whether the information presented in the financial statements provide relevant data or indications related to the auditor's concern. After reviewing all 3 companies' financial report in 2023, similar statements were found across all of them, which is the adequacy of the company's disclosures in the financial statements was reviewed, and all matters were already discussed in the context of their audit, hence they have no separate opinion on these key audit matters, signaling that the information presented in all 3 companies' financial statement provided enough relevant data related to the auditor's concern. Finally, question 9 asks, what are the differences in accounting methods that should be taken into account when making comparisons? For inventory valuation, both Nestle Malaysia Berhad and Fraser and Neef Holdings Berhad calculate the cost of their inventories using the weighted average method, while Dutch Lady Milk Industries Berhad did not disclose theirs in their financial reports. For the depreciation method, all 3 companies recognize depreciation on a straight line basis over the estimated useful lives of each property, plant, and equipment. And lastly, for deferred taxes, both Fraser and Neef Holdings Berhad and Dutch Lady Milk Industries Berhad use the liability method, while Nestle Malaysia Berhad does not disclose relevant information. Similar accounting methods means that comparison by financial analysts can be easily made to reflect accurate performance between all 3 companies. That is all from me. Thank you very much.
Section B, we have chosen Dutch Ready Milk Industry Berhad. The company does not publish a standalone sustainability report, instead it's included in their annual report. They also use the sustainable development goals as their benchmark to guide their initiative. Despite, we will highlight the environmental aspect as it is their primary focus during this period. By adopting sustainability practices, these have achieved various benefits such as reducing costs, improving efficiency, complying with environmental regulation, and strengthening their market and position reputation. For question A, extent of sustainability reporting by the company from 2021 to 2023. In 2021, Dutch Lady Milk Industry implemented various sustainable initiatives. The company recycled canteen food waste into fertilizer and introduced 3R program in its offices, resulting in an 88.5% reduction in landfill waste. To enhance energy and water efficiency, it adopted measures such as water cycling, steam condition recovery, LED lighting upgrades, and also launched the One Day One Leak program, which reduced water consumption ratio and ensure prompt action on leakage. Through its wastewater treatment plant, the company produced 691 tons of biosludge repurposed as fertilizer using bioorganism technology. Sustainable material sourcing was prioritized with RSPO certified palm oil, SSC certified packaging, and Rainforest Alliance certified cocoa being used. Dutch Lady also contributed to river rehabilitation by removing 11.1 metric tons of waste from Sungai Penchala. In terms of packaging sustainability, 74% of packaging and 73% of plastic were recyclable. Additionally, the company maintained its ISO certification that demonstrating the compliance with international environmental standards.
In 2022, the company implemented Industry 4.0 technology to improve operational efficiency. Next, it also sustainable solving by using RSPO certified palm oil, FSC certified paper, and solving 82% of material locally to support local supply chains. Besides, the company also participated in the Malaysia Recycling Alliance and External Producers Responsibility Initiative to promote circular economy principle and improve waste management policy. The company also have improvement in energy, water, waste and emission management, along with packaging sustainability achieving 92.5% recycled packaging and 69.9% plastic recyclable. Lastly, the company also supported sustainability agriculture by promoting eco-friendly farming practice through the Farmer to Farmer program. In 2023, the company continued applying Industry 4.0 technology to improve operational efficiency. It also focused on sustainable material like RSPO certified palm oil and FSC certified paper. Next, the company set a target for net climate neutral daily by 2050 and a 30% reduction in energy and water intensity by 2030. To improve waste management, the company adopted circular waste management practice and eliminated single-use plastic in factory. Besides, the company also improved wastewater treatment and energy optimization. Furthermore, the company conducted a carbon assessment to identify emission reduction opportunity. Lastly, the company target achieve 100% recyclable packaging by 2030 and continue participate in Malaysian Recycle Alliance and EPR initiative to improve recycling infrastructure.
For question B, it is about any major changes of the sustainability reporting of the company over the 3 years. The first major change is integrating with financial reporting. In 2021, the sustainability initiatives were presented as an independent section of the annual report. Thus, there was only little connection with the financial performance, which made it difficult for the stakeholders to understand how sustainability contributed to the company's long-term value. In 2022, Dutch Lady Milk Industry spearhead transition to an integrated annual report, combining financial and sustainability narratives. This highlighted how ESG were no longer a side activity, but central to the company's strategy and operations. In 2023, the integrated was further refined by linking specific action such as waste reduction directly to financial results. This demonstrated measurable impact and reinforced stakeholder trust. Another major change in the sustainability reporting is the inclusion of metrics and data. In 2021, the report was only included limited quantitative data such as 74% recyclability rate of the packaging materials. This made it challenging for the stakeholders to track progress and measure the company's effort in sustainability. By 2022, Dutch Lady Milk Industry spearhead introduced a more detailed metrics such as 82% suppliers of contractual agreements and 237 farmers being trained through the knowledge sharing programs. These metrics provided a clear picture of the company's effort and their scope. In 2023, the report provided a much more clearer granular data, such as 43.5 million liters of fresh milk being purchased from the local farmers and compliance with the fiscal policy. This level of detail made it easier for the stakeholders to evaluate progress.
For stakeholder engagement and communication, in 2021, the report followed a generalized approach, limiting tailored communication for specific groups, which reduced its relevance. And by 2022, Dutch Lady Milk industry shifted to an integrated annual report approach, improving stakeholder segmentation. In 2023, they fully embraced this by addressing the unique concerns of various stakeholders, such as highlighting partnership with over 400 local farms. For advancement in visual presentation, visually the 2021 report relied heavily on text with minimal visuals. In 2022, they added basic infographics, but they weren't integrated into the narrative. And by 2023, infographics, charts, and graphs were embedded throughout, improving accessibility and engagement. And the next one is focus on forward-looking statements. And regarding future goals, the 2021 report focused mostly on past achievements, with little mention of future plans. And 2022, Dutch Lady Milk Industries included future-oriented statements but lacked details. And by the next year, 2023, they set specific targets like achieving 100% waste management, demonstrating their commitment to sustainability. In conclusion, from 2021 to 2023, Dutch Lady Milk Industries report evolved from generalized content to integrated reporting with tailored communication, enhanced visual, and clear goals, positioning them as leaders in corporate responsibility. And thank you.
I will discuss the sustainability challenges faced by Dutch Lady Milk Industry Berhad. Firstly, the Dutch Lady faced the issue of the triple burden of malnutrition, which includes overnutrition, undernutrition, and micronutrient deficiency. This issue were affecting Malaysians of all age, especially on children, not only impacting health but also contributing to the global economic burden of obesity and nutritional deficiency. Dutch Lady aims to reformulate its product to meet diverse nutritional needs while keeping them affordable. The company has set a target to have 95% of its product meets global nutritional standards by 2030, with 92.6% achieved in 2023. They are also actively engaging in consumer education through continuous medical education programs and collaboration with NGOs and government agencies to combat misinformation about nutrition and encourage healthier dietary habits while strengthening the company's credibility as an expert on dairy-based nutrition at the national level. Moreover, Dutch Lady Milk Industry Berhad is facing the global climate crisis, which can increase water scarcity, decline biodiversity, and increase extreme weather events. This change not only affect livestock productivity and supply chain stability, but also probably cause logistical disruption to the company. To tackle this, the company is working towards a net climate neutral dairy by 2050 by decreasing energy, reducing scope 1, 2, and 3 emission, as well as minimizing the water intensity to maintain zero to landfill. Additionally, Dutch Lady is committed to reducing energy and water usage by 30% by 2030, using 2022 as a baseline. Due to operational adjustment and the transition in a new manufacturing facility in Bandar State, the company expects temporary increases in resource usage and emission in 2023, but full capacity at the new facility will be reached by 2024. They are also focusing on waste management by eliminating single-use plastic, reducing non-recyclable waste, and decreasing costs related to plastic use, but scaling this effort to achieve a significant environmental impact remains a challenge. Thank you.
Moreover, the company faced a transition of a new operation model requiring employee and management to adapt new roles, system, and way of working. Therefore, Dutch Lady made new fit for business model to support growth and people aspiration. Besides, maintaining workforce morale and adaptability during transformation has also been challenging because engagement and retention declined in 2023. So, Dutch Lady offer a training program and initiative to retain talent and boost loyalty. Lastly, Dutch Lady also facing workplace safety and risk during construction of a new facility. By boosting workplace safety via safe first culture and giving initiative, Dutch Lady aim to maintain zero work-related fatalities. In conclusion, Dutch Lady had made strong progress in sustainability from 2021 to 2023, focusing on environmental goals like cutting carbon emissions, reducing waste, and using recycled packaging. Over 3 years, that strategy shifted from basic to more comprehensive and data-driven strategy reporting, include shareholder needs and financial impact. That strategy also added advanced technology, boost community development, and enhance packaging sustainability. That strategy also faced the issue of burden malnutrition, global climate crisis, and operation transition, while committing to its long-term goal of achieving net climate neutral daily by 2050. That's all for our group. Thank you.